Hello, everybody. Welcome to our weekly trading show, the kickoff to the new week after a short week in the USA. We had last week a public holiday, and today we are back free this week. It's Rudiger. You can see him, or better known as Rudi. He's asset manager and Elliott wave trader. Then formerly known the Martin Gersch. He's there, specialist in futures, seasonalities, and Ichimoku trader. And me, of course, my name is Mike Seidel. I trade with the rules of Dow theory and some fundamental data. And yeah, let's have a good time over here in this show. And let's start at first with the risk disclaimer. We have the obligation to do this, so just let me switch over to the screen. And I hope I can do this, but I can't. No, you see my screen, is right. You should see my screen. So for the first thing, please have in mind futures, stocks, and option trading involves substantial risk of losses. What we show here are just informations for your trading, and that's what you should have in mind always when you trade and when you see what we do. We do this for our own. We are traders, and some of the equities that we are talking about in future maybe have high risks, and we will trade it or have it already in our portfolio. So that's all what you should know. And said with that, I will go back and switch off my camera, full focus to the charts in this case. So we will first have a look to the indices. So let's have a look to the Dow, for example. But before, there are some informations that we traders should have in mind before we start the trading for this week in the US. Why? The reason is quite simple. The first one, we have a quite crazy week behind us. When you see this huge green candle in the YM, this is the future for the Dow Jones. It's a huge candle, and we had a lot of volatility last week. And what you see here is the situation that the traders have to make a decision. What is the biggest threat for the markets? The stalling economy or an inflation? And the inflation is quite high at the moment, but we might see some lower rates in the next weeks because of the prices, for example, for some industrial commodities are coming down. Oil is a bit topping. This can make a bit less pressure to the inflation side. The other hand is the stalling economy, and this is something where the Fed has an eye on, especially set to the unemployment rate and the inflation rate. And it's actually quite simple for you to check this. I just check, for example, the US Consumer Price Index. We have it here. We see here the latest data from June. What you have here, and you can see here the date, the 13th of July is the date when we will get the next numbers here. And it's quite easy to see. We have a huge spike in inflation. Yeah, you see this. The actual rate is 5%, and this is it's ways behind the target, not behind the target. It's ways above the target, from round about 2%. What's the goal from the Fed? But the Fed said, all right, it's temporarily okay when we have an inflation above the 2% rate, but inflation rates are a huge thing in USA. Not only in USA, it's actually a worldwide thing. The second one is the unemployment rate, and this is what you can see here. The Fed has the target unemployment rate below 5%. And when you see what the US economy had before COVID-19, you see this here, 3.5, 3.7%, and now the latest numbers were 5.9% from June. So there's a way more space to the downside, and the stock market, the job market has a lot of room for improvements, and this is crucial for the economy in the USA, and the Fed has a priority, to say it in that way, to the job markets in the USA, and this is crucial for the next weeks too. This is very important, and the next thing that is very important are the 10-year rates, and this is quite easy to find. For example, just check marketwatch.com, and you have here the rates, and just check the rates for the US 10 years treasuries. This is quite simple, and when you see what's happened here during the last 6 months, for example, I make this a bit bigger for you that you can see it a bit more. You see this chart over here. We had a peak nearly 175, and this was the time where the market did not believe the Fed that the inflation pressure is just temporarily, and the next numbers will show how high the pressure is. But when you see here what's happened with the 10-year treasuries, the percentage, we are at the moment on the downside to 134.7. So this is the impact from the upside to the downside, and this will take some pressure from the interest rates, and take some pressure from the Fed to raise the interest rates too early, because this would be a huge problem for the market. So let's go back to the YM, to the Dow Jones Industrial Average for this week, and yeah, the markets are still closed, pre-market time, and what we see is a thing where I'm not too happy with. Why I'm not too happy with? We have the option to get the follow-through day, because of we're not yet sure what the traders will do after the market opening. At the moment, you see here it's a snapback, but the situation where the snapback is placed, this might be a problem, because you see here the all-time high, you see here a lower high, and this one could be the next low high. And when you see this, this can bring the markets in trouble, because when we here get the next snap back from the resistance level, will show that the market is under pressure. And you should not forget, the reporting season starts tonight or this week with the banks, and the banks are pretty good in her business when we have increasing interests, but the increasing interest is the situation that the interests are increasing is over for the moment. That means you have seen it with the 10-year treasury, and this might be a little problem for the banks in short term, not in long term, but in short term for sure. And this is crucial for the markets this week, because of we have the analysts, we have the companies, and we have the outlook, and all the things can bring the market under pressure. And what we have here is the potential to the downside. We have the next support level here in this area, roundabout over the thumb, 34,200 points in the Dow, and this is the current trading range that we have here. And I wouldn't wonder when we will see the next test of this level here with high volatility, but there's another chance for us. Let me show this here with my drawing tool. It's quite easy, just what we have here. You see this, maybe we will see something like a contraction pattern over here below this level. This could be a good situation to see that the price range for the days are getting closer together, and maybe this could be a good situation to bring the markets back on track. That means that we will see this uptrend ongoing to the upside and test the new all-time high. This is the view to the YM, and the next one that I have in mind here for today is the US bull. Tech is back, is the Nasdaq, and yeah. What shall I say? No question. Yeah, you see the short-term pressure in the Dow, and what do you see here? We have decreasing interests, and the Nasdaq is on the upside. This is so crazy at the moment, guys. We have this very strong reversal Friday. We had the Thursday candle is here with a huge candle size, and you see the markets came down from here around about 14,500 and closed at 14.7, and the Friday close was at 14.8. So this is quite bullish at the moment. And when you see what the prices here are doing at the moment, the market is buying the tech sector, and you see this here. This is the bull. On top of all the money flows from the Dow into the Nasdaq, and this is quite insane to see here. So it wouldn't wonder me when we see just higher prices around about the 15,000 point mark here. Let me check this here over here, round about in this area. This is also quite easy to give the potential from the last correction. Just measure out this way here from the upside to the low is here, and when you put this on top, it's even much more, maybe 15,000, but the potential is for sure much higher when you just see the potential from the last regression here. The next target from the full potential are 15,200 and a few points. So this is perfect to see here. The bulls are back, and with this in mind, with this for your preparation for the two-day markets, I will switch over to the next one in our round. So yeah, I think it's you, Rudi. I hand over the monitor to you. I hope I can do this, and then yeah, it's your number.
Yeah, awesome. Thanks for great trading ideas so far, and looking forward to share my ideas. I have some prepared. Just let me switch to my screen so that you have the best view on it. I will bring you some trading ideas based on the Elliott waves. Mike said it at the beginning that I'm an Elliott wave trader, so I'm looking at the shape of the market. Is it a strong market? Is it a weak market? So that's what I'm focused on. So I will turn off my cam so that you can focus on the screen and have the best view on my charts. So hopefully this works well. Yes, of course it should do so. So I have Atmos Energy here. It's a utility and gas utility, something, I think really important to know. No, definitely not for me, because I know many people are number crunchers and saying, hey, what kind of company is it? To be honest, I'm not interested in the company. I'm only interested in the price difference. So that's the reason why I'm merely focused on the charts and thinking of what are the traders or the investors are doing something currently. Are they strong buyers? Are they weak buyers? Are they losing interest in something? And I think you can see this from the behavior on the buy side. So when you see that the market is getting weak or the market is not pushing forward so much anymore, then you can guess, okay, they have not the best mood. And if there's an interested earning message, for example, you can see they have earnings here on the 4th of August. So it's a while to go, some few more days to go there. But of course, they will react on things like this or on other news. But the way they are reacting is, let's say, driven or biased by the current state of buying interest they have. So what I'm looking here at is a strong move to the buy side here. It's a really strong pushing market here to the upside, and currently we have a downtrend. This is currently the opposite direction, and you can see it's a completely different type of game here. You can see this is a really strong. It's a unidirectional. It's without any big setbacks. Of course, you have some breaks here. Yeah, I can see them as well, but it's a really small one. It's not too many of them, and no overlapping here. And you have the other side. I can just draw a line following the chart, and I can see this seems to be a really corrective pattern here in this case. So if I have to compare both sides, which is the stronger one, the bull side or the bear side, I would of course say it's the bull side. So what I want to do is to buy this market. I don't want to be on the weak side. So in this case, I'm just looking for a good entry to enter the market here for some long positions. So for the buy side. And in this case, we have several ideas to enter the market. One very easy and easy to apply and easy to fulfill is just to buy the last intermediate high. You can easily see we had a last low here. The previous low was that one. So you can buy the market at that point here, which is roughly at 101.88, maybe 87, something around that. Please compare with your own charts. But this level here, when breaking through this level, it is an indication for an end for this downtrend. It's not a proof, but it's a strong indication that this down move is over. And what will happen if the counter trend, if the weak trend is over? Yes, we will see, or most probably, or hopefully see a continuation of the strong trend, which is to the upside. And if it's only a one-on-one, it's the same size, which is a typical minimum situation, then we can estimate that the market will continue the same amount of price movement here to the upside, which will lead us to roughly 115.50 roundabout at a minimum target. Of course, we can maybe have more. It's not given that this is the very end of this, but if you want to be sure, then estimate that the market will have an opportunity or the chance or the risk of turning here, whatever you think of. So I would like to prepare at least to take profits here. Maybe I stay in the position here with a trailing stop. You can of course apply something like a super trend or parabolic or whatever you like to use in this case. But this is something as a minimum target where we can aim to. Is this the only way to trade situations like this? No, we have another opportunity to come into the market on a lower time frame, for example. If you see the same pattern maybe on a lower time frame, which is maybe we can see here on a 15-minute chart. It's not absolutely clear because this is pushing forward already, but you can see if we have a strong move here and a respective downtrend here from by side and by time, then you can say, okay, if this is ending, then we can proceed to the upside, and which is leading us into the same direction and giving us maybe a good entry on a lower time frame. So in this case, it's up to you which you prefer. For our institutional clients, we very often use this one because this is giving us a little bit more time, and the time frame is a little bit bigger, so we have more time to buy all the stocks we need for this trade, for example. But you, of course, if you're a private trader, not picking up too many contracts, for example, with the stocks, normally it's not a big deal. But if I want to buy futures, for example, and going in the 1-minute chart, you can exactly use the same idea. But then you find that maybe buying 50 or whatever futures is not possible, but buying 5 or 10 or whatever, depending on the market, is a no-brainer. You can easily do that because the market size is big enough, especially with the S&P 500. There's no big problem, but sometimes buying the Dow Jones or something like this, it can be a problem. So these are two opportunities to enter the market on the long side. Normally, when trading this trading situation here, we place a stop not below this level. We can of course place a stop below this level, so when the market is plunging through this level, we don't want to be long anymore, so we can take the loss and limit the loss in this case. But we can have an advanced stop here when we proceed to this entry level. You can see I'm just measuring the Fibonacci tool here to this up level here. You can see when the market is breaking through this level here, then the market is moving into the right direction, into the long direction already. So we can trail the stop at least the 78.6% level. This is something we did by our own and by some combined data or number crunching here, we realize that very often when the market is moving so much forward, a setback by 78.6% Fibonacci level here in this case, it's not very typical that the market will recover and move strongly to the upside. So it's a quite nice idea to trail the stop to this level, or to start the initial stop here at this level, and trail the stop if the market is following the uptrend here in this case. So this is one trading idea here, entering the market at this level and on the lower end here. This is our stop when entered long. Of course, when the market is going lower than this level here, we can think about a different trading strategy. For example, then maybe this might be an entry here to enter at this level. But before that, the market needs to plunge through this last low here. So we don't want to talk about this so far. So I left you alone a little bit with this situation, but I want to give you another idea, in this case with the AMD Advanced Micro Devices, which is a similar trading idea, but on a lower time frame. So I want to show you how you can deal this in this case. Of course, this is not so much an investment, it's more a trade for a few days or for a few hours maybe, but the trading idea behind that is exactly the same. So you can find out which trading horizon, which time frame is working best for you. This is something I really like here in this case, because the market is showing us a strong move to the downside here in the 15-minute chart, or you can also see this in an hourly or 4-hourly chart, whatever you prefer. The market is pushing down very, very strong and coming up in a weaker manner. It's an ABC pattern, a typical one. We've talked about that before. So in this case, we can add some additional drawings, not only the same idea we had before. Let's stick with this one more time here. You could see this would be our entry in this case. Our target, to keep it simple, is the minimum target. It's in one-on-one. So thinking of a continuation, this one after the break, continuing to the downside, it's easy like that, and you can estimate where the initial stop might be for this case. But you have another chance, and I want to show you the next chance. I will use the higher resolution here, you can see it a little bit better. So in this case, we can find maybe a better opportunity to enter the market short here. Not only the last intermediate low here, the B wave, the ABC pattern here, the low of the B wave. You can think of a cluster, and I love Fibonacci very much. You can see it here by this level here already. But you can also use something like the Fibonacci retracements, measuring from the highest point to the lowest point here. You have the 38.2 level here at that level, and the 50 level, 61.8. It's a standard. It's nothing very special. These levels alone are not strong enough in my eyes to really guarantee that the market will turn it around that point. It's not exactly that point given by a cent or by pip, whatever market you're trading, but it's just giving you an idea where the market may turn. But if you have two lines, for example, the probability of a turning point, a pivot, may be higher. So what else can we have to measure where the market can have a turn? We can use something like an extension. The extension is always measuring the counter move. So within these up move, the biggest counter move is this from here to there. And you can see, okay, this level is done already. We can clean it up a little bit, but you can see the 161.8. You may not read the number here. Maybe it's exactly the same level like the 50% retracement level here. But now we not have only one level here. At that point, we have two levels already. This is increasing our chance for a turning point, let's say, a little bit. But what else can we do? We can, of course, measure something like symmetries. Symmetries are, for example, the first part of the up move, which was this part. And we can measure this from that point here. And if you see that the same amount here from that starting point is leading us to the yellow level here, which is nearly not seeable or visible here in this case. You can see this is a 100% level, and it's exactly at the same level here. So we have already three levels at the same price level here. So you can see the chances that the market will turn here may get higher and higher. And we can try to find more like that. We can for example, we can see, okay, what else do we have? We can see what is another uptrend maybe before this downtrend, and we can see, okay, we had one more, for example, at this level here to the highest level, and we can try, is this giving us an extra indication? Yes, it is. It's a little bit lower than the other levels here, but we can see that this area here around these 91.49 roughly is giving us a quite nice cluster of resistance in this case. So we have a good chance that the market will turn from that point. It's not a promise, it's not given that this will happen, but the chances are very high that the market is doing something like this. Of course, if you wonder why is he measuring this one, why isn't he measuring this one, I can measure this one as well, and I can do this from that level, for example. But this is not helping me because the market is went through already. I can do this from this level here, and I can see the market went through already. So it's no use to keep these levels because the market went through that levels already. But you can of course do this with any of these movements here. If you're not sure which one shall I take, and you can see, okay, some we went through already, others are lying in front of us, but they are not. When they are close together, they give you all a good idea that the market has a good opportunity to turn around. And if you really love to, you can also use something like this. An X or former low is working like a resistance level here. So I see a great chance that the market is turning around at that level here. So if you don't want to wait for a plunge through this low level here, the B mark, which I had announced before with the ATO stock here, you can, or Atmos, you can see we have a good chance that the market will turn here, but I don't want to trust these levels. Some people say, there's a line, or there are clusters, there's a cluster. I will sell short now because it's a proof that the market will turn around at once. No, it's not a proof, but it's giving us an opportunity to find a closer entry, and some possible entry for that is using something like a super trend or some other trend followers. Normally, I would say a trend follower is not giving us a good opportunity to enter a market because a trend follower is following the trend, so is always lagging behind. In this case, this trend following indicator is not giving me an entry, it's giving me some kind of an advice that the bull market in this case is over. But when the bull market is over, my bigger trend, the stronger trend here, should continue, and that's the reason why we can, for example, use this for a close entry. The idea behind that is that you have a really nice risk-reward ratio. You can easily see that no matter whether this is euro or US dollar or whatever you prefer, you can, just by reading the numbers, you can see if you have your initial stop here above this level, you have your entry, for example, on the green dots here. In this case, of course, you can alter this. If you don't like the super trend, you can try this with a parabolic or any other indicator you prefer. And you can see by risking 1,000, maybe you cannot read this number. This is 1,000. This is a standard number here for us. You will earn 4 times that. So this is, of course, not giving us the 100% perfect chance that this will definitely will happen, but you can guess that the probability of this is high enough that we will earn some money with trading trades like this. So this is my trading idea with the AMD, with advanced micro devices. You can, of course, wait for this year. You will have a worse risk reward ratio, but you will have a higher probability maybe of being on the right side, because this is a better confirmation. But on the other side, if you use something like this, then you can have maybe a better trading result, because the risk reward ratio is way better. And I think the chances for this, when the market is plunging here, or if the market is plunging here, is quite okay. If the market is going to the other direction, it can happen, of course. It can happen, of course, but in this case, we will never be triggered here on this level. So we will just see and wait for the next opportunity. So that's it from my side with AMD. So I'm handing over to Martin, because I think he has something nice for us as well.
Yes, I will do this. Rudi, and I would like to say thank you for your information. It was great to hear some educational content, and I hope our listeners and our audience will take some very, very good information from this, because of the charts are are very important for us traders. We can read the traces of the charts. This is one of my specialties. And when I see what you are doing, then are you the Elliott wave specialist? But we too, we guys, we do nearly the same, but in some different ways. But we have the same view to the markets like other traders too, like Martin in the next few minutes also. And it was nice to see your view, your vision of the markets when the chart indicate you to go better long or better short, and your explanation for the trading term that what you say now, for example, in AMD, it's a regression trade in the bigger time frame, but for the short term, it is more short, because if you see here in the 15-minute chart, the situation that we have a downtrend, and this is I like it. You did a great job, and yeah, with this I'm looking forward to Martin. Martin, it's your time. I hand over the monitor to you. Just give me a second for this, and yeah, what's up next, Martin? I'm looking forward.
Yeah,
See you later.
Okay, let's see. Okay, there we are. So for today, again, I prepared two different stocks. They are really different because the companies are acting in completely different ways and in different environments. But I tried again to find something that could help you earn money on the market, because what we are going to see is two companies where I really like the fundamental situation, and of course where I really like the chart. And yeah, so let's start with the first one. You can see it already. It's RH, formerly known as Restoration Hardware. I'm going to switch off my cam to give you the full screen. And so let's start. RH, if you don't know the company, I guess you know it because it's very famous, very well known in the US and in Canada. Yeah, as I just said, Restoration Hardware was the older name. I think they changed the name about 4 or 5 years ago, somewhere around 2017, I think. What they're doing is they are operating as a retailer in home furnishing. So they're offering furniture and lighting and textiles and decor, outdoor garden decor, child and teen furnishings. So that's what they're doing. But actually, it's a little bit more higher class. So it's a very good quality, and it's not really cheap. But as you can see, they have a quite good earnings situation. We see that the annual revenue is rising year after year, and the same is with the earnings. And if you take a look at the last quarter that we have seen here, the second quarter of 2021, you can see they made a revenue record, even though like, yeah, this kind of pandemic situation we had, where many people were not able to go outside and do what they normally are doing, like going to restaurants or visiting festivals or stuff like that. So a lot of places were closed down, and people in different parts were not allowed to leave the home instead of going to work. And so there was a lot of, yeah, let's say free money where people didn't know what to do with it. Traveling was not possible. So a lot of people bought furniture and decoration stuff, and so this really propelled like the revenue and the earnings of RH. But as you can see in the second quarter 21, where reopening was already in play, people still went to the RH stores to buy all this stuff they need for their homes. So I think this company is in a really good situation. also post-pandemic. And yeah, you can see it in the earnings as well. We see the last 4 times here we have earnings beats. Last quarter was a big beat, was really great, the quarter. And you can see what analysts are expecting now. Yeah, we had earnings from around $5 a share in the last quarter. Analysts were expecting around $4, a little bit more than $4 a share. And now expectations grew up to $6.50. So I think, yeah, here I have it, like the estimates. The estimate changes. 90 days ago, the estimates for the current quarter have been around $5.80 a share, and it's moving up and up and up. And at the moment, we're at $6.43. And it's also always good if analysts revise their estimates to the upside, and they don't only do it for the quarter, they also do it for the whole year of 2022 as well. So next year, analysts are expecting a great revenue and great earnings as well. So this is what I like fundamentally. If we take a look at the market performance, you can also see why I like this stock. Over the last year, the US market made progress of 39.1% performance. The specialty retail, which is the sector that RH is belonging to, made around 80%. That's quite good. So we can see it's a really good sector to be in as an investor. And RH is even a lot better than this good sector. They made 170% performance over the last year. And you can take a look at the 2-year, 3-year, 4-year, 5-year performance of all these years. RH was doing a lot better than the overall market. And my guess would be that this is something they're just going to continue. So with this said, let's take a look at the charts. So what do we see here? Like always, we do. I can start here like with a monthly view, because this is a stock that's already trading for several years here. We can see on the monthly view how big the trend is here from beginning in the, yeah, let's call it Corona crash down here in March last year. From these lows, the stock made around nearly 900% here to the upside, 877% to the upside from March 20. So this is quite a big move. And what I like especially on the monthly chart is what we can see here, because this actually is something like a bull flag in the market, where we have this small range here. And if we see a breakout of this range, this would be nothing less than a continuation pattern in the market. So let's get rid of this one. This we don't need. Okay, so let's switch to the weekly chart. Oh, okay, program is taking a second. Yeah, there we are. Okay. Okay, weekly chart. We see like this rounding bottom down here. We can see my trend indicator, the Gersh trend indicator, started moving upwards here from the middle of May. It turned back into the bullish zone, coming out of the bearish zone. We've been in bearish territorium for several months, for several weeks here, beginning in the end of February, beginning of March, where the market turned down, went below the 10-week moving average, and was going down for several weeks. Then trying to bottom down here, moving up again, moving up above the 10-week moving average. That's the first really good sign, yeah, that this bear market might be over, or this pullback might be over. And then we turned bullish again here in the middle of May. And since then, any investor who was buying RH somewhere after the mid of May last year had no reason to sell the stock, because on the weekly time frame the trend was going up all the time, and momentum was getting stronger and stronger. And now, even in this last correction that was not really small, yeah, if we take a look at this correction, this was nearly 20%, yeah, 18% correction. There was no reason to sell the stock, because overall market still was strong here. Okay. Yeah, so what's the case now? We see RSI is turning up. I like stocks that have a high RSI reading on the weekly chart. The ones I like best are above 70. We can see it here. RH on the weekly above 70, and we saw a really strong move to the upside. Same here, going up above 70, strong move to the upside. But we can see the RSI is turning up again, and if we manage to break above the last high here on the weekly, I guess RSI would be above 70 as well. We see the price is above the 10-week moving average. I like this as well. And on the daily time frame, let's take a look at the daily chart. This is the daily chart. We can see from the last correction that we just looked at, around 18% correction. The price was retracing to the 50-day moving average, closed below the 50-day several times, and then we got earnings. So big move to the upside. We saw a retracement again to the 50-day moving average. I like this. And we see the trend, the overall trend on the daily chart is still a little bit bearish on the downside. And we also see that the stochastic, the slow stochastic, was moving into the overbought territory. But we saw a little retracement in the last week on Thursday. Overall, Thursday was quite a weak day in the markets. But RH managed to create like something like a bullish candle here. This is a bullish hammer candle in the market. We had a continuation on Friday, and what I would like to see now is a break out of this triangle we have here. Yeah, I would like to see a break to the upside, and in terms of building up a position, I would wait until we pass through 725. So if we go through 725, so this is the high of the last week as well, I think we have good chances to see this market moving up quite strong. How far could it go? Well, it's actually quite easy to measure it. We just take a look at the last correction from here to there, from 733 to somewhere around 600. And we just add this one to the upside so that we come here to 200%. So this is $870. Around $870 would be the target level. Yeah, this would be the target level. And if you're trading this breakout to the upside, you could place your stop somewhere here below this last low. So we can see the risk we take is a lot smaller than the chance we could reach here around 870. So this is a nice trade that I have on my deck for this week. And the second one I want to show you is ROKU. So as I said, completely different company. What does ROKU do? ROKU operates a TV streaming platform. It's a platform that allows users to discover and access various movies or TV series, as well as live sports, music, news, everything you can think of actually. In terms of numbers, as far as I know, the company has more than 53 million active accounts, still growing very, very fast. Yeah, what else are they doing? Actually, they're also producing the hardware you need to watch Roku TV. So they're producing streaming players, smart TVs, so stuff like that. And they also sell it under the name of Roku. Yeah, they are international at the moment. They're active in the United States and Canada, in UK, in France, in Mexico, and Brazil. But they're not really widespread in Europe at the moment. So there's still chances to see a strong growth from the side of internationalization to go to Europe as well. And that's a nice thing, I think, for future growth. As we talk of growth, if you take a look at the annual revenues, you can see what kind of growth levels we do have here. In 2007, we have been somewhere here around 500 million. In 2019, 2 years later, they nearly doubled. They more than doubled the revenue stream. And they were moving from 19 to 20, from 1.1 billion, around 1.8 billion. So you can take it for sure that they are going to double to 19 revenue in 2021 as well. I guess more than double. And take a look at this. Yeah, take a look at the earnings per share, like the analysts' beats they are producing here. Analysts were expecting them in Q4 and Q1 still to be not profitable, but you can see the company was profitable big ways. So we have here like 50 cent and 55 cent a share. So in the next quarter, it's the first quarter where analysts are expecting a profit, and I guess they would beat these earnings again as well. So what do the analysts say? Just take a look. We see a small upside from the analyst side, but that's not really what I think is interesting. What's interesting is the last price target we got just at the end of last week, a new street high target of $650 from Cannonball Research. And I like this overall process here. We have 14 buying analysts, we have 2 holds, and we have 1 sell. So this is even strong from the analyst side. And in terms of performance, yeah, we see it's better than the overall market. It's better than the US entertainment sector. 1 year returns, wow, 182% compared to 27% in the industry. Okay, what does the chart tell us? Let's just take a quick look at the chart. Well, we see on the monthly chart down here, let's maximize it. On the monthly chart, we can see a strong move to the upside, a big retracement to the 10-week moving average. So this is like the 50 days. Yeah, it's nearly the same. 10 weeks and 50-day moving average is nearly the same. So we had a nice back test of this moving average. And we often see it when prices go too far away from the moving average, they tend to come back and test the averages again. And that's what we saw here with Roku. On the daily chart, that's what I think is most important at the moment, is this one here. Yeah, this is something like a nice bull flag, and the bull flag, the beginning of the bull flag is in this big resistance level. So I really like if prices move to a resistance level, come down in a kind of bull flag, and what we see here is quite nice, because we see we have a declining volume in this down move. We have big volume here in the up move. Here in the up move, big volume, declining volume in the down move. I like that. So if we see the breakout of this bull flag here to the upside, this might be a good situation to trade this stock on the long side. If you're a little bit more careful, you could wait until this high is taken out, like 442. And in terms of stops, you could place your stop somewhere below this flag. Target levels, well, I guess if we take a look at what we just did, just measure the last retracement, and then take a look to the upside. This retracement to the upside, where would we land? Around $670. That's a lot. And if you see how small the risk actually is with which you could work, I think it's enough to use targets here somewhere around $520. I think that's really realistic, even for a shorter term trade, that we reach this level. So what we can do is we can take this last move and put this move up here. So we are in the range of 520 to 540 US dollars as a target in ROKU. So, and that's it for today from my side. Mike, I guess we're done.
Yes,
It's
Martin,
really
we have done, and I would like to thank you for your two great trading opportunities, two opportunities for swing trades, or sometimes even for the investors. And it's quite interesting to see you looking into very interesting sectors. For example, the hardware stores, they are always interesting. For example, also after the hurricane seasons in the USA, the seasonals, it's always the same game. Great opportunities. Or when I will have a look to the ROKU chart, quite interesting. The numbers are before and the chart is looking for me also very, very interesting. We have this contraction pattern below the last highs and under lower volume. It's great. A breakout to the upside should be a great opportunity. We just have to see how the stock reacts to the earnings, and there's also always this relationship between the analyst estimates and the market estimates, and what the company is thinking for the development over the next weeks. Extreme interesting for me. I hope for our audience too. Thank you, guys. Thank you to all of our visitors today, and I say goodbye until next week, Monday, 90 minutes before US market opening. Save the date, save the time, plan your trade, trade your plan, and see you next week. Goodbye, guys.
Bye-bye.
Bye-bye. Crossing fingers.
Yes. Two of them.